Hello, everyone, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co host, Pierce New York, filling in for Brett Swarts. And each episode, I'm joined by some of the best wealth, business, leadership, and real estate individuals in the world to share ideas, deal stories, and inspirations. So together we can make complex tax deferral strategies simple and passive income plans achievable. We are streaming on expertcresecrets.com as well as the Capital Gains Tax Solutions YouTube channel. So please rate, review, subscribe. It really helps us out, helps us bring out more content like this for you guys. So thank you so much for doing that. We really appreciate it. I'm super excited about our next guest. He is a tech genius and short-term rental master. And they created an awesome software where you can invest in short-term rentals. And I'm going to let him tell the rest of the story, but please welcome Seif Khafagi. Seif, how you doing, buddy?
I'm good, Pierce. How are you?
Oh, dude, I'm doing great. I'm super excited about this one because I have short-term rentals and I want to know how to maximize them. So,
Well, and we're both Aztec alum, right? So
and we're both Aztec alumni.
This is great.
That's immediate bond. I already wrote that in my CRM before I even got there. I was like, had a great conversation with Seif because we're both Aztecs. We bonded
At the same time too, that we just found out. So
we
it's
probably
been
know the same people.
Yeah, yeah, good times.
So, all right. So, tell us, how'd you get to where you are today, bud?
Yeah, so Sabrina and I co-founded TechVestor. We both were in short-term rentals beforehand, but we were working in tech, Facebook and Apple respectively, and we traveled quite a bit and opened up a bunch of offices and stayed in a lot of shitty Airbnbs. So when we decided to buy our own, simply because we were traveling so much, we were like, this is going to be super easy. Like the competition sucks. We decided to build our own software to find and identify the best markets and types of assets in those markets, given that we come from this privileged tech background of doing things manually was just not even an option. So as we kind of got into that scope and we released our software last year, everyone loved it. They were just like, hey, I still don't want to do the work of short-term rentals. And they were describing the beginnings of a fund and the beginnings of a syndication, for lack of a better word. So we launched our syndicate. We went mini viral in a tech Discord. I think someone shared it within a community. And we raised our first 6 million. We raised 22 million year to date in our first fund, and we're delivering cash flow passively to people who want to invest in short-term rentals, invest for tax benefits, invest for equity growth, and we're institutionalizing this asset class as it becomes more popular with the larger players. Term sheets left and right from big private equity groups saying, "Hey, like we'd love an opportunity to buy this when the time is right." And really the big idea there is roll up 50, 60, 500 short-term rentals and sell them to a larger group down the line. And that's how we all kind of generate that nice alpha we're all looking for in a tax advantaged way, of course.
Yeah, I love it. Okay, so there's a ton to unpack there. So I'm gonna be real quick with this one. But what are one or two strengths that you have that have led you to be successful?
Recruiting. I slid into the DMs of every single person on my portfolio management team. And when I was at Facebook, when they were like they hired us I led our second largest engineering team in terms of hiring, and we took that from 90 people to over 1,100 in 5 years. And they called it building a team. I called it building a company because that was some massive growth back then.
Yeah.
But recruiting and hiring the best talent, I genuinely believe we have the best talent in the space.
Well, it sounds like it because you guys built out an entire software that went viral for short-term rentals, which, if you've ever managed your own short-term rentals, they are awesome and they are a lot of work. So
Yep.
I love what you're doing because it's so brilliant. All right, so let's dive into the software for a second that you built that helps people identify short-term rentals. So tell us that story. What does it do? How does it work? Where can people get it? All that kind of stuff.
Great questions. So Sabrina and I built it about a year ago, and the idea of the software was to run what you were doing manually via spreadsheets, AirDNA, or a tool like AirDNA, Zillow, bringing that all together under one house. So our software simply connects to the MLS, open access to the MLS through one of our advisors, connects to several data sources, including the likes of AirDNA, and helps us identify what markets are kind of up and coming, right? Revenue, price to rent ratio, market mapping. So I can tell you by zip code and by neighborhood and by block in markets what the right asset to buy is. So for example, in a market like Scottsdale, I'll never buy a 3-bedroom home. I'll only buy a 4-bedroom or a 5-bedroom with a pool with a specific acreage, right, as an example. So it helps us define our buy box. And really what this allows us to do is for the hundreds of thousands of properties that come on market every single month in the markets that we're market mapping, 94% of them suck. And so when you're underwriting properties at this level of scale, you don't want to spend your time and energy on properties that you're not going to do, deals that you don't do. You want to spend your time and energy and resources on deals that you might do, right? And bring a human element to that. Our software actually is not available for public use. Our software is completely proprietary. And today we do not license it or outsource it today. It is a common question we get, but it is one of our competitive advantages.
I respect it, but I hate it because that's
maybe in the future.
Maybe we'll have to bond over more Aztec stuff or whatever.
as you get a sneak peek, but hey, you know what? The idea is that we're the first guinea pig, right? And so if we're able to run and scale a 30, 40, $50 million portfolio successfully using our own OS, then those are, that's proof in the pudding for a lot of others.
Yeah, there's a lot there. Okay, so rad. So, okay, do you give then like consulting advice or whatever? So if someone calls you up and is like, Seif, like, hey man, like I'm looking to buy some Airbnbs like in the Orange County area, right? Give me 1 or 2 markets in like a buy box. Like how much would that cost me?
We don't. So all we do is we are in the belief that short-term rental investing should be passive. And the best way to invest in that asset class is to be passive. The reason there is because operationally it's a headache. And unless you want a job, right? Unless you want a job, this is not an investment, right? And so we built the first institutionally approachable short-term rental fund that is available to accredited passive investors who are open to diversifying into this asset class. So investors simply invest capital with us. They're instantly a shareholder across 50, 60, 75 plus properties across 8 different markets. They don't take on any of the liabilities of debt or management or anything else along those lines, but they share in the benefits of everything that comes with owning short-term rentals, including the cash flow, the equity appreciation, the tax benefits. And actually one of my favorites is our partners get to actually stay in these homes as if they're their own. They're an owner, right? So they get to save 30% off of staying in any one of these homes.
Sweet. Okay. Tell me about how you operationally manage these, because you just said they are a job. And I know from experience, they are a job, especially in certain markets, especially at certain times, right? So how do you become a super host, right? And how are you actually like putting the pieces in place that are just making it operationally so smooth? You're basically vertically integrated, I'm assuming, at this point.
Yeah, we're fully vertically integrated from acquisition to disposition, and that's again one of the key strengths that we have. And the way we do this is everything that we can handle remotely, we do, right? Pricing, guest communications, right? All those types of things. Everything that requires a physical infrastructure, given that we're in several markets, right? Hyper local, we white label, right? And it's really about, again, hiring, recruiting, technology, systems, automations, right? So understanding when a booking is made, that triggers a multitude of things like cleaning, things like maintenance checks, things like quality control, and all that is built through a proprietary OS that we have on our back end, in addition to plugging into your everyday tools that you have out there, such as Hospitables or the guest fees or the PMSs and price labs. And all those tools are fantastic in every single way. And I encourage them. We use them. We probably spend more on data and understanding data of short-term rentals than probably anyone else, because with data, we believe we can make better decisions.
Yeah, for sure. Okay, so you've got a series, and this is all basically your entire company is running off of your back end OS system that you guys built, and now you're able to leverage that in order to make super wise decisions because you're collecting all the data. You're buying assets that are cash flowing and returning super well because you're not buying the 3-bedroom house in Scottsdale. You're buying the 5-bedroom with the pool, which is increasing your monthly revenue and all that kind of stuff. And so your returns, I'm just going to go ahead and assume, are probably pretty good. But let's find out what are investors actually getting when they invest in your fund.
Yeah, so before I touch a little bit on returns, I think from a data perspective, we're think as of last week, we're looking at 18 million data points a month, right? In terms of analyzing, right, across the markets that we're in. And, looking at comps and how they're doing, keeping an eye on our competition as well as how we're doing in those markets. But a quick disclaimer on returns, of course, I have to say it. None of these returns are actuals, right? None of these things are to be expected. Our fund is exclusively open to accredited investors, and this is not a solicitation in any capacity. But look, we target to double capital every 5 years or so, right? 2 to 2.5x. With that comes, 8 to 12% cash on cash, fully done passively in a tax advantaged way, with a nice pop of equity when we sell in year 5, right? So the idea with syndications and private placements like this is you're trusting an operator, in that case that's us, or a general partner, right, to go out and execute a business plan, right? And our business plan is, we can use data and talent to go and find and identify the best possible properties to deliver those returns, right? And this is why I think it's super important to invest with the right operators. The right operators oftentimes are more important than the right deal.
Yeah, and I mean, no doubt, you could have a phenomenal deal, but if you can't execute it, you're gonna lose all your money. So
exactly.
All right, let me shift gears on you for a little bit, because I'm sure you're in these 18 million data points that you've got, a ton of different data points on the economy as well, right? Mm-hmm. And how that's shifting and how that's changing, and what, how are you guys pivoting, given what you guys are doing, and what are you guys seeing coming down the pipeline here, and how are you going to prepare for it and all that?
Yeah, I don't think it's to anyone's surprise that the market is softening, right? Both in real estate and just in general, right? Recessionary talks or potential recession already, depending on how you define it. Seems like the definition changes every day to that. But in our case, there's a couple ways we hedge, right? We're completely actively bullish on this market, even in these times. In fact, in these times, we're even more bullish when others are fearful, right? We become incredibly greedy, right, in terms of how we want to approach the market. So we're investing for growth aggressively today. A couple of things. All of our debt that we take on is 10 years or longer, no floating rate debt. If you look back at 2008, and I think that's the natural correlation that a lot of people make, like 70, 90% of that debt was all floating rate debt. They had big balloon payments unexpectedly. Today, that's like less than 5. Lending criteria is completely different. We're 25% down. We hold $1 million plus in cash reserves, right? Or like everything that we're doing is completely hedged. In fact, we're being strong. We're seeing that our offers are being accepted, and our negotiation power is better than ever because of our economies of scale and the market. So we're investing aggressively. We believe that a recession is possible. It's probably likely, but our booking demand is way up. Like, for example, so far this year in 2022, we booked a year's full of revenue in 9 months. We're pacing ahead by about 20% year to date on most of our properties. And it's because our properties are significantly better. We believe better operators will always be fine regardless of market, right? Our properties are better designed, better equipped. We understand what that local market looks for. It's priced appropriately. We're getting premiums on days that we can, and we're conceding premiums on days that we can't, right? Because we're better. We're not going to let a day go by that we're not generating revenue. So these are all these types of things that allow us to hedge the market that, again, your day-to-day mom and pop operator, the 97% of the market, does not do, right? Both because of a lack of knowledge, time, or resources.
Yeah, there's no way I couldn't do that. Like,
yeah, it's hard
for me to know. I mean, dude, like, we got a spot on the beach, right? Like, it's a fantastic location in Newport Beach on the 100 block, right next to the sand. Like, it's a great
I'm gonna come
spot.
stay there, so I'm gonna take you up on that one.
Come stay. It's awesome, right? Come stay, and let us know. But we have no idea what we're doing. Like, as far as like, we just know it's by the beach, and the location probably makes it book, and we got pretty decent pictures on there, right? And we play with the price if it doesn't book and till it books. Yep. So, but we're not. I mean, we still have a vacancy rate of probably, I don't know, 10% maybe, like of sometimes, like, it's just like, dude, I have no idea, like,
there's no what data backing your decisions.
I have no data. I have, I have what Airbnb is like, price suggestion, go to 251 to 256.
Oh, please don't use.
And I'm like,
Airbnb's
nah, dude, I'm not gonna do that.
No, Pierce. Like, oh my God, we're gonna have to talk about that. No, they're so the crazy thing, and like one of our advantages is Airbnb is a tech product,
Yeah.
right? So like, let me speak tech for a few minutes here. Airbnb is a tech product and it has a user journey, right? And so the without the product being successful, at the end of the day, Airbnb is not successful. And so we understand the user journey of an Airbnb user because we've built similar software. We understand what
Right.
the intent is, right? Like little things. When you type, I guarantee you, if you've booked an Airbnb recently, here's exactly what you do. You go to Airbnb, you type in where you're going, how many people are going, and the dates you're going. First page is going to pull up of listings. You're probably going to open up 6 to 12 different tabs, okay, of properties that look good, right?
Yeah.
Specifically based on that cover photo. You're then going to go through those 6 to 12 and narrow it down based on price, amenities, resources, etc., down to your 2 or 3. Oftentimes, because we focus on bigger homes, you're going to copy the link of 2 or 3 of those properties. You're going to send them in some sort of a group chat or to some other decision maker who's oftentimes not just you. Okay.
Right.
And then that person is going to help you, or that group of people are going to help you decide. You're going to reach out and inquire about 1 or 2 properties. Speed matters in terms of communication, right? So that's why we have less than a 3-minute SLA on terms of response time. And in addition to all that, you're going to want better pricing, better resources. But naturally, depending on why you're coming, certain things are going to matter, right? If you're coming for a bachelorette party, you're not as price sensitive, right?
Right.
Those are types of things where it's a celebratory moment. Understanding all this, what we just talked about happens within seconds, milliseconds,
Yeah.
right? And so we have to be able to prepare to actually take that. And once we know all that from an automated perspective, we have humans behind the scenes who are actually able to converse and relay the message in a human way. We don't believe technology replaces people. We believe technology guides people, right? At the end of the day.
Yep. Yeah, that's a super interesting point because it's it's pretty much exactly what happens.
Yeah.
I mean, when we go, I won't maybe do 12 properties. I'll just kind of scroll through, be like, okay, this one, this one, this one, and I'll be like, hey, wifey, which one do you want to go to, or
Yeah.
whatever, like.
How many
So,
times? How many times do you make it to page 7?
I
Rarely,
have,
right?
I have no idea.
It's just like Google, right? So like ranking matters,
Yeah.
right? So understanding the algorithm and like SEO for Airbnb matters, right? That's technology. It's understanding what's under the hood. Just like you have to understand the Google's algorithm. Those are things that we excel at.
So, what is the number one secret to becoming a superhost? If you were to, I know you just touched on 18, million different data points and all that kind of stuff, right? But if you were to be like, hey, these are like the top 2 things or top 3 things you should absolutely do, like in order to increase your rank. If you're a mom and pop, you're one of the 97%, right?
Yep.
What what would those be in order from most important to least important?
I think one of the most important things is ranking. Actually, so if your goal is to drive revenue, right? I actually don't think optimizing for Superhost is that critical. I think it's just more about optimizing for revenue. People oftentimes talk about like pricing and occupancy, and I'm like, all of that is just a part of a formula that affects revenue. Revenue at the
Right.
end of the day is what matters, right? Because it's about profitability. People, it's funny when I hear this group like, oh, we drove $200,000 in revenue. I'm like, well, how much did you take to the bottom line?
Right.
Right? Like that's what matters, right? It's profitability and revenue. It's like good revenue. And so first thing is gonna be ranking, right? Where you rank is arguably you're the most strongest indicator of booking volume, right? It's just like Google, right? How many times do you go to page 7 of Google? Almost never, right? It's like it's not on the first or second page. Oftentimes you're not even going there, right? Secondly, please use dynamic pricing, right? Like if you're charging $500 a night every single night, whether it's a Monday or a Saturday, like you're leaving money on the table and you're leaving occupancy on the table, right? Like that
Sure.
just doesn't exist, right? Use those softwares out there. They're incredibly cheap. The ROI on them is like insane just to use them. Okay. And thirdly, understand who your avatar is. Depending on the market that you're in, and the type of property you own, the type of person who stays at your property differs quite a bit. Right? In Scottsdale, and because we do bigger homes, we get huge groups of bachelorette parties. I mean, just this past quarter, we launched a Barbie house or Barbie themed like house, breakfast at Tiffany's like vibe, and a Saturdays are for the boys, right? Type thing, right? And it's like those are the types of things that are going to attract. And we have our family homes, of course, but in a place like Clearwater, I'm not launching a bachelorette house. It's not what
Right.
attracts there, right? It's not what goes there. So it's like understand your avatar. Who goes here? Why? Why do they book this kind of asset? A 2-bedroom and a 5-bedroom home are not booked by the same type of person, right?
Correct.
Or type of group. So understand who's coming here and honestly just appeal to that.
That's interesting. You mentioned the dynamic software. What software would you recommend? Or
Price Labs is one of our favorites. It's one that we use. I actually don't think any of the pricing softwares out there are perfect. I think they are a baseline, and I think you need humans to actually guide them, right,
yeah,
and tell them what to do. Price Labs is good. We know that the fellows over there. We also know the guys over at Wheelhouse. They're pretty good. The idea is about implementing one and setting some sort of rules and cadence, but also just go look at what your competitors are doing, right? Are you drastically overcharging or undercharging? Never believe that you're the one who's going to set the market, right? Like
yeah.
that's an ego thing to set aside, right? And be like, what is the competition doing, right? And you should be underwriting for that at acquisition, because if you're not, then you're going to feel the pain at operation.
So all fantastic advice. And I'm gonna do one more pivot on you. So your strategy right now is to acquire, maximize revenue, right? Operate for 3 to 5 years,
Mm-hmm.
offload, liquidate.
Yep.
And you're going to be offloading, when you hit a certain revenue point and all that kind of stuff. Have you thought about what you guys are going to do with the tax implications of that?
Yep. So the way we're structured from a legal perspective allows us and our investors to roll that into future portfolios, 1031 style, or defer that equity again. So there's going to be options there for what we can and can't do. Now, in a syndication, um, it really depends on how things are structured, right? And I obviously can't sit here and provide tax advice. But the good news is we have one of the best teams in the space from a tax perspective. It's the real estate CPA and Hall CPA. Brandon Hall and Taylor and their entire team has been fantastic, and literally invented what many know as the short-term rental loophole, right? So that's literally our tax team and CPA advisory.
Nice.
And perhaps we'll call you for the DST.
Yeah, absolutely. What would be your biggest frustration with a 1031 if you were to make a move like that?
I think in our case, it's not like one asset to one asset, right? It's, dozens and dozens of assets in a syndication type form. It's almost like a business, right?
Yeah.
Rather than a single asset. And there are rules and implications for what you can and cannot do.
Yeah, definitely. And I think that's one of the biggest things with the 1031 in general. They're fantastic, right? And having those, those, if you find those deals and those up legs and so on and so forth, like they're great. But there are some just restrictions to it that can kind of limit you and put you in positions where it's not necessarily as advantageous as it could be.
Yep.
And that's why we use the Deferred Sales Trust. You kind of alluded to it a little bit. And just for those of you who don't know, a deferred sales trust is an alternative to a 1031. It works with not only with real estate, but it works with business or stock or crypto or, a primary home. I mean, we're even doing a deal right now with a racehorse.
Wow. That's a
So
first for me.
it's if you got a horse, it's winning
It's
Kentucky
doable.
Derbies. You buy them for, 100 grand and you sell them for 3 million. That's a capital gain. So
Yeah, that is
we're
true.
able to defer those taxes on those assets. And some other, benefits are it's like kind agnostic. So you don't have to go back in real estate. You can diversify. You could sell a business, right? And then all of a sudden put some of that fund into Steve Steele's, his fund. And then that's totally, totally okay. And there's no time constraints. So you don't have to scramble to find another deal and let that, time crunch kind of make you make bad decisions. You don't want to be a motivated buyer. So to learn more about that, you can go to capitalgainstaxsolutions.com. We have a mastermind every Friday, 10 a.m. Pacific, 1 p.m. Eastern. So be sure to come and check that out for sure.
I'm gonna have to call you on that, Pierce, because we we have quite the activity.
Yeah, no, I'm sure. And it's people also coming in, right? People coming in with $1031 that might not necessarily, it might not be advantageous for them because of whatever, right? I've talked to so many syndicators where they turn down 1031, they leave millions and millions and millions of dollars on the table because they're just like, we're not dealing with the headaches of going through the paperwork and all that kind of stuff. So we can actually save a failed 1031, put it into a DST, and then reroute it into funds. And we put 10 million, a few months ago into a couple different affordable housing funds. So we raise capital for people and stuff like that. So it's a win-win-win all the way around. It's a super fantastic strategy. And once you once you understand it, it changes the way you think about, how you're going to exit and, what you're going to go into next. It's great. So we'll definitely talk about that a little bit further, but see if we're coming up on our time here. So I got to get you into the lightning round really quick before
Let's do it.
we get you out of here. So ready?
Yep.
All right. What's your favorite book?
Most recent one was Contagious. And I forgot the author exactly, but Contagious is all about creating a product that sticks.
Nice. What is your favorite leadership quote?
Do it. Just do it. Literally. Like, I grew up a sports kid, and I think I go back to that quote all time. And it's not exactly a leadership quote, it's a slogan. But cannot tell you how many times I was so appreciative that I just did it.
Yeah. No, that's awesome. And it sounds like you're just a doer. You guys just executors, which is super awesome. Okay, last one. What are you most curious about right now?
I'm curious to see how people react to inflation in the world. I think it's a time for many that this is the first time. You go back to the 60s, 70s, and 80s, and people who lived through that period of time, I think it was a first for them. And I think it's going to happen all over again here in how people are going to react. And I'm super hyper curious as to what that looks like, especially for us who are going through it for the first time.
Yeah, we're heading into some. A lot of people use the word interesting times, right? Because I don't think they have another word. Yeah, it's going to be interesting to see what happens, and it's just code for everyone's just like crapping their pants. Like, what is going to happen?
Yeah, I think there's a lot of ways to hedge, but I definitely think I think you're going to see a lot of people who are ill prepared, and that's going to be unfortunate.
Yeah, absolutely. It's going to be interesting for sure. So, all
There's
right.
the word.
Yep. Seif, where can people find you? How can they get connected with you, and how can they invest with you?
You can check out techfester.com if you're interested in learning more. We also have a bunch of free resources for those who are interested in learning just more about short-term rentals. We're all about education first.
Yes.
So if you're ever curious, have that conversation with us, and we're happy to send that over to you.
Okay, and you guys are only for accredited investors?
Correct.
Okay, so you got to get your letters.
100%. 100%.
These guys are squared away. You're not dealing with some willy-nilly over here. So,
No.
All right. So go to techvestor.com. Check it out. It's good stuff. See if any parting words, man.
No, thanks for having me. I think my parting words are just going to be like, look, if you're ever curious about an asset class, like go explore it. We're so early in the short-term rental space. I'm sure we're early in hundreds of other asset classes that I can't even begin to talk about today. But the world will look different in 50 years than it looks like today. Let's try to get ahead of it.
Yeah, absolutely. All right, guys. Well, thank you so much for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and the professional team struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, and investing in funds like the STR fund that Seif's got is just a fantastic way to create, preserve, and grow your wealth. So please rate, review, subscribe. Thank you so much for listening, everybody, and we'll see you on the next one.